joining us from Sydney is Westpac senior economist Justin Smirk. Justin, thanks for joining us. Well, you know, it was quite a blowout number. Nobody got it right, I think. You were the closest here. But what gave you that optimism?
Well, it's pretty important, Rishaad, to sort of focus on the fact that this is a survey and not an actual outcome of job prints or employment numbers. And what we did was, for the last few months, is focusing on the volatility in it. So you've been seeing big bounce around in both the number of people who are finding jobs and also the number of people who are looking for work. So we saw the big rise in the labour force, the rise in participation. That was mapped by that strong jobs numbers, which we think is perhaps more important to look at the unemployment rate. Now, if you look at what that did this month, it printed 5.1%. Now, that's on par with the average we've seen so far this year, and we saw it's a slight rise from last month's print of 5%. So overall, even though you've been seeing this volatility in jobs numbers, the best way to describe the Australian labour market is it's holding its ground at around the sort of 5.1% unemployment.
Well, I was talking to one of the bosses at Manpower earlier on the programme, and he was saying that 50% of employers just can't get the right people to fill their positions. There's a lot more jobs which could be created.
Well, it really depends on what sort of jobs you're talking about. So there are a lot of vacancies in mining and mining services areas in particular. What we've seen is over the last 4 years of this resources boom is people who are willing to sort of translate themselves into the mining sectors in very remote and rough locations have done so. And it's very hard to recruit people into those areas. However, there are still people being laid off in finance, in retail, in manufacturing, and even in hospitality now in this country. So there is this mismatch of jobs happening, mismatch of skills and mismatches of locations. So while there are pockets of pressure where there are shortages of skilled people wanting to take the jobs, there is still this rising sort of softness in the overall labour market.
You know, when we see the unemployment rate go up, is that just basically a function of the overall pool of labour?
That's very true, and what the ABS is doing when they try and do these surveys is focusing on their sort of employment to population ratios, the participation ratios and the unemployment rate, while the actual levels get sort of thrown around a little bit more that get generated out of these ratios. So there's a lot of volatility in the survey as the samples roll through. So if you sort of step back a little bit and look at the overall trends over the last year, we've seen the Australian economy add just over 100,000 jobs, add a little bit less in terms of what's in terms of participation, in terms of the labour force, add a little bit more, and that's the reason why the unemployment rate is roughly flat. So you can really say the labour market in Australia is neither weak nor strong, and it's really just more likely holding its ground.
Justin, let's talk about the economy as a whole. Blowout numbers for the first quarter. Is that really something which you're going to see in the second quarter as well? Because, you know, retail sales and other economic indicators do suggest there is a bit of a slowdown.
Well, the retail sale numbers are quite fascinating because they show that strong household spending in terms of volumes. And when you look at the deflators, you can see it was driven by a lot of ongoing discounting. Now, we know the discounting is sort of extended into the second quarter, but nowhere near as aggressive and nowhere near as stimulatory. So we suggest that household spending has been coming back this quarter. Business investment outside the mining sector continues to languish. And we also are getting a softer government spending coming through. So that real outsized growth in Q1 we don't expect to be repeated. But it does highlight there is some, even though we've got a very mixed economy here, it does have some underlying strength.
Okay, well, what ahead now? I mean, the Aussie dollar's been lifting up on the back of all this good news here. Is that sustainable, or do you think actually with perhaps further interest rate cuts on the agenda, perhaps further out, looking at maybe September or October, you see weakness for it and probably welcome relief for many people?
Well, we do see we still have a view that there's weakness coming through, particularly in the jobs market, that the strength we saw in the first quarter is going to fade, and so we are talking about more rate cuts here. But just as critically for the Aussie dollar is sort of the global view. So the Aussie dollar responds on a rebound in commodities. If you think there's more problems coming out of Europe and the US, you do see that correction there. Also the strength of the US dollar. It's been weakening of late. We think that's going to reverse too as well. So the current strength in the Aussie dollar, we would suspect, given our view for more rate cuts and more global uncertainty, is a little bit overdone. And we're talking about a low of 96 over the next 3 to 6 months.
Very quickly as well, many people are also saying the same thing about this talk of a Chinese slowdown being overdone. What's your view?
Well, the Chinese slowdown we've been looking for over a year now, and it's coming through, and it came through a bit more savagely than we expected. And the recovery is being a little bit more delayed than we suspected. Possibly some people who have been caught by surprise are overdoing the talk of the Chinese slowdown. We can see where the recovery is coming from. but we'd have to suspect the recovery, given the constraints around their fiscal and sort of investment policies and their constraints that they don't want to fire up another housing bubble, means the recovery in the late this year is probably not going to be as strong as some anticipate. And we suggest that that will still weigh on the Australian economy as well.
Justin, thank you so much for joining us. Justin Smirk there from Sydney Westpac.